I can't do it anymore. What's going on, everybody? It's Sunday Night Stocks. I wanted to give like deer in the headlights, like, hey, he's not talking. What's the matter with him? So like, you're on. Say something. Do something. Hey, what's up? Again, it's a Sunday night, everybody. I'm Russ from this Dapper Dividends channel here that we started, coming to you from the from the Dapper Dividends world headquarters, just outside of Chicagoland. No, just outside of Chicago, I think I'll say, because I'm in Chicagoland, but not in Chicago proper. So, anyways, nobody here has accents. It's all of you that do. Anyway, what's up? I'm so happy that you decided to come back and see me. And even though I've never met you, I love you. So, thank you for swinging on by. And we're going to hang out for about an hour here and just chit chat about some dividend stocks and investing things and whatever else might come up. And I thought it was really interesting. I saw an article. Oh, by the way, let me say hello to everybody. John, where have I been? Buddy, I've been here. I was on last week. I've been talking to people. I talked to Harris. I've been doing my thing. So I'm here, baby. I'm here. We got Ray. We got the Bamboozler. Everybody, dude, this is our community. I love it. And, I'm not a know-it-all. I'm like I was telling my buddy Ryan Williams, it's kind of funny. Sometimes I feel like I'm a little bit of the jokester guy. I do some welding, construction type work, but I have a passion for dividend stocks, for investing, for trying to create passive income that one day will pay. I don't know if it'll ever reach all of our bills, or cover all of our bills, but even if it's a good chunk and I can just do some blow off job, that's just a lot of fun for that extra income. You know what? That's what it's all about. It's all about sharing this journey that we're on together and learning from you guys as much as I can. And then myself learning and sharing what I've learned and experienced and, things that I'm thinking about. So look at this. Shamir's sipping on some Coke Cherry Zero and bought some. All right. Yeah, we'll get into what you guys bought in a minute, but I'm going to try and make this intro really quick. But before I do, I want to show you something that may neither be here nor there, but I find it interesting. Next time you see, and you guys probably know I've shared this, you see a FedEx truck. This is what you got to do. I'm telling you, look for the arrow. And you're probably like, what's he talking about, the arrow? Well, let me do this first. I didn't have it lined up. Thought I did, but this is going to be fun, everybody. Yeah, you're going to look at all my stuff here. Here we go. Look at this. It's slop. I know. This is completely unprofessional, but hey, it'll get the point across. What we got here, you some of gum. Check it out. Have you ever noticed this? That there's an arrow in FedEx right there in between the E and the X, purposefully designed that way. Well, if you didn't, now you do. And every time you look at a FedEx truck, you can see that and you'll think of me. Next one is the hidden logo. This is a PepsiCo jam. PepsiCo owns this. Check it out. The Tostitos logo. They got two people in the middle with a bowl of dip from the Tostitos dip sharing it. It's a friendly thing to do, I guess, is to share Tito's over some dip. And then the last one, a little bit of hidden logo here. Don't tell me that's going to cover it. I'm going to have to zoom. Oh my God, what are we doing here? Come on, Wendy, cooperate. I didn't think this through. Here we go. The Wendy's logo. Check that out on her collar. Look at that. It says mom. You see it? Here's this M-O and then M. They say it wasn't intentional. We're going too big here. It wasn't intentional, but mom from Wendy's. And we'll stop sharing that and get on to, John, I'm going to answer this right now. I've never heard of the ETF Moon, so if you give a little bit of color on it. So anyway, I'm going to say what's up to all you guys. And really quickly, yeah, Ray, just talking about, we were talking, the Amazon smile. But you know what that smile's for? It's from A to Z. The arrow goes from the letter A to Z, meaning that Amazon's got it all and they'll put a smile on your face. Okay, so let's see if yours truly can keep this to 5 minutes or less. So a little backstory. I was bopping around looking at news and I came across this article from Seeking Alpha, which is website that we use, a lot of us use, and they have pretty cool news things. Let me hide hold on. Hold the phone, everybody. Let me hide your smile comment. While I do like it, Ray, let's keep it professional here, people. What we're going to do is stall while I'm slowly loading up the share screen thing here. And we're going to do this. All right, so here we go. I was on good old Seeking Alpha, and this, it doesn't mean that they're going to take off, but there's a good chance that these stocks are indeed primed to get ready to take off. So, all right, I'm looking at myself. Oh, I'm not sharing it. You got to be kidding me. What is the deal? Look at this. Isn't that fun? This is when, remember, those of you that have been with the channel a while, when I try to share stuff and I somehow muck it up. Try it again. Now we can do it. Okay, now we're sharing the screen. So here we go on Seeking Alpha. I do have a link to the article below. I don't know if you'll be able to read it. It's a very short article, but it was just basically saying that REITs have been just in an awful downtrend for about 18 months, and the REIT sector is starting to outperform the broader market. So it could be indicative of breaking this 18-month downtrend. And if you can't get this article, it's really short. You can go back, pause the video here, and zoom in, whatever. But I thought this chart was interesting, looking at some of the REIT subsectors. And obviously, one of the most beaten down with good reason is office space. 3.6%. It's been up for the week, but down 15% year to date. So kind of cool. There's some interesting snapshot for you to look at, ponder in the REIT space. Retail is one of the big ones that I like. Realty Income is heavily diversified into, that doesn't make sense, does it? They have a heavy presence and allocation to retail. I think it's 82%, but I didn't bring up their website. Maybe I will. Don't let me forget that if we want to go over exactly what they're diversified into. So that's the article. That's that. I was also bopping around and found this S&P Global Market Intelligence, which they are a dividend paying company, S&P Global, as far as I'm aware. And same thing, they're showing that they're logging positive returns, but still underperforming the S&P 500. And, it was an interesting article. This one everyone can read. It's just goes through a little bit. I'll show you this. This shows their real estate sector total return comparison, which blah, blah, blah. It's going to show you that which ones have done the best apartments. But what I wanted to show you as that ad comes up is on finviz.com. Anybody can access this. You go to finviz.com, click on groups, and under groups, you will see the performance. So it goes from 1 day, week. You'll see one of the things that you can almost always count on is when a whole sector has been the worst performing for a year, that it will likely be one of the better performing as it recovers whenever it is. We don't know exactly when, but some of the best buying opportunities I've seen are when an entire sector is down, like the financials were. What is it they say? That, yeah, some banks were in crisis, but it wasn't a banking crisis. And a lot of people made it out to be a sector-wide banking crisis thing. But as you'll see here, over the last, let's zoom out a little bit more. Yeah, healthcare has been really bad. Look at J&J. They've been dropping. Over the last month, we see that real estate has been recovering again, up 2.26%. But as we go down a little bit further, so in the last half year, negative 0.63, over the last 1 year, real estate has been the worst performing sector. And obviously, look at tech up there, huge. And over the last year to date, real estate, where are you? Plus 0.1.89%. So the real estate sector, yeah. And if you click on the bars, we won't go into that. You get all kinds of stuff. And then last but not least, I wanted to show you the VNQ. This is the Vanguard REIT index, if I've explained that right, ticker VNQ. And over the past 5 days, look at that. It's starting to outperform the S&P 500, which is the blue line. But, the further we zoom out, a month S&P is beating it. This is total return. So this is dividends reinvested. I think VNQ has, we'll look in a second. But yeah, the further out you go, because obviously S&P is, I believe, index cap, what market cap weighted, right? Meaning that the companies that have the highest weighting get the most attention. They've been going up the most, like Apple and Tesla and those. So those have been really driving, from what I understand, the S&P 500 higher. But dude, just look at over the last 10 years. Yeah, if you put money into the S&P 500, for crying out loud, look at that, 214.53% total return, just awesome for the S&P. And then if you're in real estate, yeah, it's kind of underperformed, but they've had some really nice yields. So hey, if your thing is trying to beat the yield on the S&P 500, then you're going to do that. And we will see. This is for VNQ. It is a 0.12% expense ratio, and the yield is 4.51%. So I'm going to jump back. I want to see your guys' comments here before we get too far gone, and I can't get caught up to all y'all. Oh, look, you guys probably know. They're like, let's not say anything while he's talking. But anyway, first, I want to say I love it that you guys are from all over. It means the world to me. It really does. I know I joke around about a lot of things, but what a super, super cool community that we have here that I've become part of. And you guys are all so nice enough, and gals, to swing on by. And yeah, so just real quick, I want to see where we're from. I'm going to go over. We got Shamir in Canada, Jim over in Nebraska, Fast Eddie's in Texas, dude. Just a nice spread right there. Arizona for Kevin. Let's see. Rick Gilbert, West Palm Beach, Florida. Pat's in Michigan. Steve, I thought I saw Indiana from Steve. Yeah. So, hola a todos. Hello, all. My guy, I don't know how to say your name here. Klausian? Hola, señor. ¿Qué pasó, mijo? Amigo mío. My friend. What's up, my friend? And then, oh, look at this, dude. Yeah, you guys know I love UHF. I am hoping one day I would gladly be the mayor of Spatula City. I loved it so much. Anyway. Yeah, look at this. We got Gregory from Orange County. I love it. Let's see. I'm going to see if what do you guys got questions here. By the way, yeah, look at this. Shamir, you bought some more SCHD, VYM, and VTI, a couple Vanguard funds. Well, all funds there. Very, very nice. Yeah, I think that's, isn't that a Taylor Swift lyric? I'm not a Swiftie, but hey, I would go see her for free. Andrew, how many monthly stock dividends companies do? You might have to say that again, man. It's Sunday night. I know. I worked 8 hours today, but I'm loving it, dude. How many monthly stocks dividends companies do people regularly? Andrew, you got to clarify that a little bit more for me, because I'm not exactly sure what you're saying there, buddy. So, hey, Burn Survivor, what's going on, man? Thank you for getting back. Yeah, an ETF Moon. Never heard of it. I don't know what it's about. We may look it up in a minute. Sound like my father-in-law here. John sipping on. He's not sipping on the gin and juice, but on the Coke with real cane sugar. My father-in-law likes the real cane sugar. And this is relevant because what was it? 2 weeks ago now, right? With the WHO saying that aspartame is a carcinogen. That could affect a lot of people's choices in the consumer packaged goods, what people decide to spend their money on. But here's the thing. I don't mean to point at you. I think I meant to do like this. Here's the thing. Here's the point, everybody, is that Coca-Cola still uses aspartame, but you know who doesn't and swapped out of it? 2020. That's almost 3 years ago. Hey, that's that Cook County education we got crack-a-lacking here, is that PepsiCo stopped using aspartame. So they may be a little bit ahead of the curve, and somebody over there is reading the tea leaves right. But yeah, Ramon LaGuardia, the CEO of PepsiCo, has said non-sugar is king. It's what the market wants. It's what people want. So, if they're not putting sugar, you're still going to have sucralose and stevia or acesulfame potassium are some of those. So, all right. Ah, too bad, James. He can't watch. Well, you have to go back and see. All right, all right, all right. Wendy's more of a mommy, right? Yeah, it's weird. They said they didn't mean to do that, and I can kind of see it. But Chris probably already gone now because that was 10 minutes ago. So I got to get caught up here. I'm gonna get caught up. Sorry, everybody, if I do. Um, if I did. Oh, look at this. Ryan Dangler. What's up, man? Yeah, on Twitter we were talking about pizza. So did you buy it or have you been investing in it? PZ, I don't remember. PZZRF? No. It's a Canadian pizza company. So yeah, Moon, I'm just not familiar with it. Let me get caught up to you guys. So apologies if I scrape over anything really important. Re-put it once I get caught up. Here we go. Andrew clarifying for us. Has anyone ever just invested in cheap monthly or quarterly stock dividend companies only to make money? Just to invest in cheap monthly or quarterly stocks dividends companies make money. I don't know if you're using text to speech, but a couple periods in there might help this guy out, but I think I got your gist. So have we ever bought cheap monthly or quarterly stocks just to get paid? Uh, I think that's yield chasing. I wouldn't recommend it. You can try to do it. You can try to buy those high yielding companies, but I don't know. What do you guys, have you ever done that? I mean, I know most of us probably wouldn't recommend it. Yeah, 82% retail. So if you guys want in a minute here when I get caught up, we can just pop on to, and I say it, the dividend porn purveyors is Realty Income on their website. Just really nice stuff. What did you buy, John? Zim? Yeah, for fun or as a joke? Hey, well, I've done that too, and I don't know if Darth is gonna pop on, but he does that a lot where he'll say he play money, and I'm like, dude, pretty soon that play money is gonna add up to real money. But I get it. I kind of did that with Surge Pays, ticker SURG, non-dividend stock. I think it's a micro cap, and I think it's a company that could. I like the direction and the trajectory of the company and the business, hooking up poor. I don't know if that's a right to say. I don't know what else to call it. Disadvantaged people, hooking them up with internet. They get some government subsidies. So Surge Pays is trying to tap into that market. All right, let's see. Kevin, yeah, what's up, man? We missed you. I got to get caught up. From Yakima, we got Atlanta in the house. Gary is from the southwest burbs of the Chicago. And how many monthly or quarterly stock do people are basing this? It's totally up to everybody. I mean, it could be from 2 to 200 if you're Darth or Jason Fieber. Those guys get up there. They got a lot. So, oh, dude, from Poland to go from $0 to $10 a month. Man, dude, bravo. And I don't listen to anybody, because one day, I mean, I'd love to be at $100,000 of annual dividend income, but guess what? Here's the little secret. You ain't going to get there without that first dollar of annual dividend income, which will be to your first 10 and then 50 and 100. And you just build from there, and it takes time. And that's the thing that turns a lot of people off about dividend investing, is that it's just not, it's not a get rich quick theme. It's called get rich slow. And I would add probably boring too. So slow and boring. A lot of people don't want to do it. Let's see. Can I guess? Can I roughly guess at what portion of my stocks are in a taxable account versus tax sheltered accounts? The bulk are in tax sheltered or tax advantaged. I have a 401k through work. I don't share it because it's boring, and it's really just 3 mutual funds. 2 of them are Vanguard, but I kind of want to keep that part of our net worth private, I guess. But the 3 that I do share, which is the self-directed, the taxable, and the Roth, which there's a link below if you want to pop on to my site, Dapper Dividends, which needs a lot of work, I know, but the basic information is there. and you have no, I'm okay. I'm just a little bit of I ate dinner a little bit. Man, my wife made some chicken and some mushrooms. Oh, I love those mushrooms in like oil. But uh, I don't remember what I was saying. Oh, the portion of my stocks, the bulk is in tax advantaged accounts, which we're working on. We're putting money in when we can to our taxable account. But, we just took a trip. I'm paying off the credit card. So it's been a little bit, not as much. But to answer your question, I put 20% of my pre tax income every week into the 401k, and then after that we still got money going into Roth, into our savings account like emergency fund, into the kids college fund, into the kids a custodial account. I mean, I probably save a lot, and I was actually just talking with my wife, and I'd love to know, do you guys know your savings rate? We are going to calculate how much we save a year, because I really don't know. I have a guess. I know it's over 25%, but it would be nice to know exactly. So let's see. What's used in Pepsi Zero to sweeten it? We would have to look. I'm assuming, because I read, and I did, good point, man. I didn't verify it. Maybe some of you super sleuths out there can pop it on when I get eventually mosey my way on down to catch up with the comments. What does PepsiCo use? I'm going to guess it's either sucralose or it is acesulfame potassium, or ACE K is all the kids call it, right? Let's see. Kevin's sitting on 32 positions. The Canadian ticker of Pizza. And they are not affiliated with Little Caesars, by the way. I did find that out. And, Addie, love you asking this. Anybody else? I'd like you to answer this question too. Feel free. What are you thinking of selling this week? What came on my radar this week? Honestly, I'm still on the fence. I have 10 more shares left of 3M, and I'd really like to get them over 100. I was working today and I was listening to shout out to the Dividend guy, Mike Haro, our friend from the Great White North. And one of his podcasts I was listening to, he talked about things that are kind of irrelevant. And one of them was using technical analysis, like selling when there's a stop loss, meaning that if the price gets down to a low enough point that you predetermine to sell at, it will automatically trigger a sell. And I had a thought off of that we as dividend investors should really only sell when we have a thesis loss, meaning that our reason for buying something has changed or is changing or is completely gone. And a lot of what I bought 3M for has changed or it's completely gone, meaning their earnings are declining. Their payout ratio is getting higher. They've been growing the dividend at a snail's pace. And these lawsuits were not part of that or at least they weren't as this ginormous when I started buying 3M. So all things that have changed my thesis for investing, but that's what I'm looking at selling is 3M. But buying, we'll see what the week does, right? I think Wednesday we have the CPI report coming out. So we'll see what that brings. We can never predict what these things are going to do, the market and CPI and inflation. But, oh, look at this. John's got 200 Verizon. He's going to sell when it gets up to 40. Yeah, that's interesting, man. I've been thinking about Verizon long and hard. I know I sold some in the Roth, and I did. No, it was in my taxable account. Tax loss harvested, rolled it into AT&T, which didn't do so well. But I may do the flip now. I may just next year, if AT&T doesn't recover, which by the way, AT&T, their free cash flow the last year or two starts out really, really low and kind of misses their projections in the beginning of the year. And then free cash flow starts ramping up. But, I don't know if you want to listen to Pascal DeRoche, I think is their chief financial officer. But they're trying to paint the picture that they've had a lot of spending, a lot of CapEx, capital expenditures, but they're going to really start reaping the rewards in late 24, 25, 26. So we'll see. But then there's going to be something else that they're going to need to build out. All right, I got to get caught up to you guys here. Shamir's got all your accounts in tax sheltered. I've learned one thing from Ryan Williams, and it's how to. I'm getting better, trying to get to the comments that are in. Dude, don't be sorry for your English. Your English is far superior to my Polish. So you're from Poland, right? I'm trying to keep track. In love with the dividend stocks. Just 30 and started a month ago. You know what I will say, man? Have you ever listened to the Dividend Talk podcast? Check it out if you have not, because I was listening to him when I was cutting the grass yesterday, like Forrest Gump. I cut the grass for free. They were talking about taxation, and it got really kind of in the weeds for like European taxes, which doesn't really apply to me. But if anybody, whoever's, and if you're not, they're just two cool dudes. You got European dividend growth investor who's living in Poland, and Engineer My Freedom, Derek, who is over there in Waterford, Ireland. So really cool guys. They have that European flavor on dividends. So Dividend Talk podcast, you got to listen to it if you have not. 100% IRA for Jim. By the way, what's up, Jim? I appreciate you emailing me, and when you do. Okay, I'm going to get caught up here too. Oh, dude, look at this. We're in the presence of greatness. One of the friends of the show, Jeremy from Dividend Stockpile, who it didn't work out, dude. We didn't get to hook up for a coffee or whatever in when I was in Tampa. It was a short swing for me. I was in Tampa for partial 4 days, 3 nights, and we had so much family stuff going on, going to the beach and driving around and dinners and blah blah blah, and it was just anyway. So yeah, who's gonna yes, dude, exactly. Technical analysis and dividend investing, I try to use it sometimes to get a better price to buy in, a better entry, but then I'm just like, what am I doing? If we're buying companies that we think are going to increase their earnings, their profits, their dividends over time, the stock price is going to follow, like we shared with J&J. So, all right, all right, here we go. You know what? I'm going to pause here for a second for you, my friend, and show you what I was talking about with Realty Income. So wait, let me hide this comment. Don't mind me. We're just fumbling. There we go. We want to do that. So we're going to go into the land of Realty Income's website, and I'm going to see. Let's see here. All right. So then what we're going to do. Go Realty. I know. Thrilling and riveting, right? Let's see if we can make this a little bigger. So we would go to investors. And we would go to, where is it? Oh, come on. Dude, I'm telling you, they have a ton. Let me just click on investors. So I am looking for what they are. Where is it? Okay, of course, now I can't find, when I'm not live, it's like I can just find it like nothing. Here is our portfolio. This is what you do. Our portfolio. And then, come on, where's the drop down? Portfolio diversification overview for the purveyors of dividend porn, Realty Income. So here's their top 10 industries. This is why I love them. You got grocery stores, which are going to be solid. Convenience stores, you don't need me to read everything. Maybe I'll make it a little bigger for you, those of you that may not have the youngest eyesight ever. But yeah, it's just, they're very well diversified. And did I make this too big? No, I did not. This is their top 10, top 20. That's a 2. Top 20 clients. So Dollar General, Walgreens is interesting that's their number 2, because Walgreens is going to be closing, I think it's 150 stores in the US and 200, I think, in the UK. So with that being 3.6%, but I think Walgreens has like 9,000 locations or something crazy. So it's like 1.5% of Walgreens total footprint in stores. So I think they'll be okay. But yeah, like the 7-Eleven, you ever want to be a 7-Eleven landlord, that's where you go. And there it is. So property type diversification, 82% into retail and other. This is interesting because I know we're all worried about office space, but on the note down here, which is going to be too small for you to read, is that they have 10 properties classified as office. So if you remember, they spun out most of it. And oh, yeah, dude, look at this. Realty Income has maintained their portfolio occupancy has never been below 96%. And I believe right now, look at that, 99% portfolio occupancy. So if those numbers are true and accurate, that is just very, very solid from this company. And I told you, it just goes on and on. And this was just there. It's dividend porn is what it is for Realty Income. So that is that what I was going to show you, Realty Income. I hope that helps out, Mr. DeSergio. And I've been adding, I bought 2 more shares of Realty Income. If you had the newsletter, you would know that. So there's a link below. I do share it for free once a week, couple thoughts, stuff I've gotten in dividends and whatnot. But let me see here oh, look at this. Gary running a few options, going to wheel AMD. So that's Advanced Micro Devices, right? I hope so. And VLO. I don't remember VLO. So a lot of people don't understand that. We won't get into that. Oh, 3M. Yeah, Dean, 3M is another. No, we talked about 3M. Intel's another one that I have 100 shares and I'm just stubbornly waiting for over 40. We got close with 36, but you know what, man? This is part of the problem with buying a stock to sell covered calls, because this is something I did with AT&T when I first started learning about options. Was before they were trading in the 50s, and I had bought 100 shares to do options, to sell options on and get a wheel going. But man, I got stuck with them. It just kept dropping and dropping. And I think I sold like a 3-week covered call right when they started their initial descent. And then I tried to do one more and it was just, I didn't sell. But yeah, it's a bad one. AT&T, there's no premium. Nobody is really interested in that. Yeah, and you look out like a couple months, it's nothing. It's peanuts. It is peanuts. This is in reference to, wait, Stanley opens up his mouth. T shoulder should be nerve. Who's Stanley? You mean Stanky, I think, right? I was not Sticky Stanley. That was a book that I read as a kid. Shout out to whoever wrote Sticky Stanley on cassette tape. I followed along like a good little boy. All right, dude, check it out. Casey, I don't think I've seen you before, man. Crisp salute. Oh, it's terrible. Crisp salute for you. What's up, buddy? Started positions in General Mills and Dollar General. Hey, I was looking at Dollar General. That is a really interesting company. Their footprint, when you drive down back roads, I've driven through some itty bitty teeny tiny towns and there's always a Dollar General. I don't know how they do it, but they are everywhere. Dollar General is everywhere. Yeah. By the way, Jeremy, a couple months back, I was at a volleyball tournament. Jeremy was in on the Dividend Talk podcast. So yeah, definitely 2 cool guys, 2 cool dudes. Yep. Yeah. So at Jim started a position in Target Microsoft. Oh yeah, by the way, I added a few more Target myself. Not worried. Looking at it long term. They have a lot of headwinds they're working through, like the inventory, supply chain, obviously the whole, LGBTQIA plus, I think. I don't know. There may have been an extra, whatever it is. You do you, baby. Hey, if it's between consenting adults, I have more of a libertarian streak in me. So not going streaking, but you do you. If they say don't hurt people and don't take their stuff. Well, some people are into the whole BDSM thing, whips and chains. That's some people's thing. That's the pain turns them on. So, that's Anyway. Oh, dude, yeah, it's 2:30. Really? Yeah, when I was in Ireland, that's right. You guys got white knights over there. Oh, look at this. We got Kevin. I love it, Kevin. I was gonna say I love you, but I was like, I don't know if I love you. I love you, Kevin. Just in time. Don't have the youngest eyesight ever. I'll drink some water to that. By the way, fun fact here. This won't come on, focus. Use some of gum. Oh, we got it. Burt's Bees. Well, that was a pain. Burt's Beeswax. No, it's just called Burt's Bees, not Burt's Beeswax. I called it Burt's Beeswax. Do you know who owns this? Clorox owns Burt's Bees. I know, it's weird. They also own Kingsford Charcoal and Hidden Valley Ranch. And I think Clorox also owns. Oh, do you know what just popped in my head? I told you I have weird things flitter in and out. We should have looked at the Hershey's logo. Do you know there's a Hershey's kiss in the word kisses, not the Hershey's logo? They have a logo for kisses, and in between the K and the I is a Hershey's kiss. Don't believe me? Go look it up. All right, we're gonna look. No, I got to get caught up to you guys. Somebody remind me when I get caught up if I forget. You have beautiful eyesight for your age, Kevin. He's just a little bit older than me. Okay, I'm getting close to getting caught up. I love it. Fast Eddie for a wheel. There's no way I'm going to be able to explain it if you don't know what it is. Maybe some of you in the chat can point out a YouTube video. I would say just go to YouTube, type in wheel option strategy, and look for some of the more I don't know. I think Brad had a good one. Was his name Brad? JJ Buckner used to talk to him. I'm blanking on his name. Dude with the glasses, and he would have like the whiteboard. I can't think of his name. Am I investing for fire or waiting for 59? Well, Toby's ghost. I've never really had a spectral encounter before, so this may be the first time. I love it. I'm reading this book, Playing with Fire. Like, zoom in, you bastard. Anyway, it's from my library. I get most of my books from the library, and I'd say a combination of not fire. So financial independence, retired early. I don't think I'm ever going to be, quote unquote retired, because as I've been told, people think they're going to just go to the beach every day, play golf every day, and garden every day. Well, if you do that every single day, that gets boring. I mean, so I'm going to always be doing something, but right now I'm in the accumulation phase. So I do things like working 8 hours on a Sunday for time and 3/4. Kind of stunk, getting up at 6 a.m. on a Sunday morning. But yeah. Michael Swami. Hey, man, I've been seeing you in the comments. Nice to finally speak to you live. I know you can type to me live, I guess. Let's see. Yes, by the way, Kevin Burgess, fellow YouTuber, make sure you check out his channel. I'm getting caught up, so I apologize if you've had anything that, yes, Brad Finn. Thank God I at least remembered his first name. I think he has some interesting option stuff. I do remember watching one of Brad's videos on, I don't know if it was the wheel, but it was definitely options when I was learning all that. So I would recommend Brad Finn, but I'm sure you'll see whatever has a lot of the views and all that. And yes, Mariana, you are correct. You're correct. And I'm just laughing because of Dean saying he couldn't believe that Clorox owned Hidden Valley Ranch. I think they also own Fresh Step Kitty Litter. I think it's Fresh Step Kitty Litter. And get this, I can't think of the company they share it with, but they co-own a clay mine with, I can't think, it's almost there. Somebody might know. One of you will know for sure, but Clorox, this is the weird stuff I remember. They co-own a clay mine that they use for the kitty litter. I don't remember who they co-own that with. Hey, Will. What's up, Will? Not close to my last name, Knopf. Some people say not. That's my adopted name. If you didn't know, now you do know. I bought SCHD, SCHY, and one BAC. One, it's not Bank of America, is it? Who's BAC? I think it is Bank of America, right? And he bought and sold SoFi last week. Hey, if that's what you're enjoying, buy it, do it, buy it, sell it. Oh, yeah, they don't mix up the formula for I'm pretty sure. I'm gonna go out on a limb and guess that they're making Hidden Valley Ranch and Clorox the cleaning solution in different buildings or parts of the country. Although I don't know. That would be cool to know. Let's see. Oh, dude, I'm playing. I started it off by saying I've never met you, but I love you, right? This is crazy. Yep, they own. Oh, dude, Michael he just lit some Kingsford. That, by the way, is Clorox, which I sold because to me it looked way overvalued. I had only 10 shares and I just wanted to put that into something else, which, that's something that I would want to talk about in the future is thinking things are overvalued, taking profit and putting it into something else. And sometimes the something else doesn't do as well as where I would have just left it. So it's kind of a fun thought. If you think of companies that are doing really good and their share price keeps going up and up, that's for a reason. Companies going up usually continue to trend up, while companies trending down usually continue to trend down. I know it sounds really simplistic, but it sometimes is that simple. And like Warren Buffett says, the problem with turnarounds is a lot of times they don't turn, or the problems with turnaround is they don't turn. I kind of butchered his quote, but world through a windshield. Well, we want to invest through the windshield because you don't want to look behind you because that's all past data, which by the way, man, all the data we have on stocks is, I just caught that. I just caught my accent there. Stocks. The reason we don't want to invest through the windshield, you see, that's more New York. Now I can't even do my Chicago accent. My brain's like, just talk normally. You'll do it. All the data we have is past. That's everything that's happened in the past. And the current price of a stock is the market telling us what they expect it to do, which is why when there's something unexpected that happens, you'll see big swings up or down to reflect where we're at and where we think we're going. Hence, investing through the windshield. It's why it's so big, and it's why the rear view mirror up here is so small. You're not going to drive forward by looking behind you. So you always got to look forward when you're investing. Thank you for correcting, Brad Finn. Dude, salute, Brad. salute. I almost drank through my lungs again. Like when that happened before, I kind of did there. And you guys are like, hey, dude, stop drinking into your lungs. It's not how your body works. Let's see. The 3M tip saved thousands months ago. Well, I don't know if I could take full credit for it, but it's just sharing my thoughts. And it's been a slow evolution. And you know what it is, man? Part of my problem is the sunk cost fallacy and being price anchored to where I was buying it in the 150s, 160s, 180s. And it just, you start to convince yourself and say, you know what, it'll turn around. It'll get back there one day. It may take a year or two, but I don't think 3M is going to go bankrupt, but it's just more than the litigation. The business is not functioning and growing like it should be without the burden of the litigation. So yeah, you know what? Sorry if I yelled into the mic and blew out your eardrums, your ear holes. But yeah, Jeremy does a lot of this, and his website, dividendstockpile.com. Go ahead, put the link in the comments, man. I need to get better at options. At least I know how to do them, but my problem is that I get burned one time. I do it, everything's going good. And then I get into trouble with my PepsiCo where it cost me $150 to buy back the options so it wouldn't get called away. Won't get into it, but uh, I, they say you should only do options at least for dividend investors with, well, if with anyone, I guess, is stocks you want to be stuck with. Huey Lewis pops into my head. A lot of people are just saying, who? A lot of the older guys know Happy to Be Stuck with You by Huey Lewis and the News. And yeah, you should just do that. Okay, as I say, us old guys got to stick together. So Pat and Kevin, I know you guys know who Huey Lewis is. Yes, fantastic point. Clorox does also own Glad trash bags. Thank you, MJ. Hey, better late than never. I love the little avatar. Reminds me of Mars Attacks. Fantastic. And the beautiful thing about the replay, you can listen on 2X and I will sound so smart. People are like, dude, this guy knows what he's talking about. He's just rapid firing. So I do like sometimes listening on 2X, but what's your normal listening speed for YouTube videos and podcasts? Mine is like 1.25, but I think, Jeremy, you're at like 1.75 or something, but get more information. My thoughts about Altria is that they are going to probably slow down that dividend growth. I don't remember what it is right now. I think it's slowed down a little bit over the last couple of years, but man, they're in transition, right? They want to go into more heat, not burn products. They just bought Enjoy because of the whole Jewel debacle. What a mistake trying to just do it that way. But I think Enjoy is one of the few FDA approved, right? Vape products. But you know what? Here's the thing. Everyone's worried about cigarettes. Dude, they've been declining since like the 70s or the 80s. Cigarettes have been declining, except in Europe. When I was in Europe, it seemed everybody smoked, but that doesn't help Altria because Altria is only here in the United States. I don't even think North America. I think just the US. They've spun out of Philip Morris, or they spun out Philip Morris. Either way, the thing is that I don't think nicotine is going away. They're gonna find newer, safer ways for people to get nicotine into their bodies. And from what I've read, the nicotine itself is not carcinogenic. I mean, the nicotine doesn't cause cancer. It's just all the nasty ways of getting the nicotine into one's body that is what, unfortunately, so many people have lost their lives, and a lot of people will not invest in Altria or some of those sin stocks because of that. So that's a personal decision to make. But I'm looking at buying more Altria. I'd like it in the lower 40s. I wouldn't expect crazy share price appreciation. Probably it'll go up around $50 one time again and come down. But they're just a cash cow. They'll keep incrementally raising the prices on everything they have. I do know they had a stake in Kronos, was it? And I think Bud, right? I think the much now maligned Budweiser. Why Clorox is a lazy stock? Just slow growth. I mean, nothing groundbreaking. And they have had supply chain issues as well and inventory issues. Let's see. TD. I haven't been adding to TD, but once again, I've just been buying a lot of Realty Income. I think I have 125 shares of TD, Toronto Dominion Bank, which, again, they're going to be fine. It's almost like an oligopoly in Canada, meaning there's just a few banks. They're really tight with the government. It's really hard to compete with them. I know there's only like 6 banks, 12 banks, where there's like thousands of banks here in the United States. But, one of the things about the banks here is that everyone thinks that this whole commercial real estate is going to affect the banks. But I'm kind of thinking it as, they say it's like a slow moving car crash, watching all these debt maturities, all the debt that's due on a lot of the commercial real estate come due. They think there's going to be defaults and this. Dude, everybody knows about it. Where is this recession that everybody's been talking about? It hasn't happened. So, I think sometimes when everybody's talking about something, it's just not going to, it doesn't always happen. So, plus, you can't rule out the companies augmenting. They're going to do things. They're not just going to sit idly by and be decimated. They may amend contract. I know BDCs and REITs, they will amend agreements, loan agreements, or rental agreements. If a tenant that they believe in is having some short-term issues, they'll just extend it out, or they'll do various things in order to amend the contract to keep them bringing money in and on board. So that it'll be interesting to watch for sure. Nobody knows what's going to happen. We all have our opinions. Kevin's investing in Mo. Oh, dude, you are a trucker. Okay. That's a clever name. I love it, man. And just shout out to you. Uh, I, what was that noise? Somebody should remix whatever that noise was. That noise was this guy's brain having about 17 thoughts and trying to jam it down the funnel to the mouth. And it was just too much. It was too much information trying to come out of my mouth all at once. But what was I going to say? Someone remind me. Oh, the loading dock equipment. That's what I work on, man. When you back your truck, assuming you're an over-the-road 53-footer, what you back your truck up into, that's what I work on. I sometimes hear that Chicago accent coming true. Like the Blues Brothers, 1, 2, 3. All right, Casey, what you got for us? I got to get caught up, dude. You know what? We're running low on time here. I apologize. I'm going to get caught up. I'm going to look for anything important here because I haven't been caught up the whole time. Do I hold closed-end funds? I do not, but Jeremy, not to point at you, but Jeremy from Dividend Stockpile does. Let's see. Okay, the speeds. Okay, great. 1.5. Oh, you can't. Yeah, 2 is too quick. 1.25. All right, good. Nice to know. So let's see. I'm going to get you. Here we go. Oh, yeah. Shamir, you're up in Canada too. Do you listen to Mike Haro, the dividend guy? I should get him on the channel once. That would be fun. I'm getting caught up. Here we go. Chat and Russ, what bothers you more? Buying a stock that drops $10 for the next day or selling a stock that goes up $10 for the next day? Buying a stock. Oh, that's an easy one, dude. Selling and then it goes up. That would bother me way more because usually what I'm buying for the long term. And if, again, coming back to your thesis for investing, what's your reason for investing in a business? You got to know that. So if I buy a stock on Monday and on Tuesday it drops $10, unless I blew all my dry powder, then it's a great opportunity to buy more. But if something pops $10 the next day and I sold, I'd feel a little bit more sore about that one. Don't be sore. All my shoes and glasses. We're going to bring the Jerky Boys back. You old guys, you remember the Jerky Boys, right? That was Saul Rosenberg. No, don't be sure. They called him up. I think it's Saul's. The accident. They're all on YouTube. The one where somebody calls and asks if he has something for sale, and he's like, "Let me look and see." And then you hear all this stuff falling. Dude says he broke his leg. He's in the chair. I'll call the. No. Anyway, it's just better if you listen to it, not some guy trying to just stumble his way through telling you about it. All right, a question. Everybody, get your questions in, comments, concerns, thoughts, whatever you got. Anything that's, not sexual, we'll talk about. But is it worth investing in $10 and $20 stock dividend companies, or is it not a waste of time? All I would say is you can't look at price, dude. Don't look at price. The price of a stock tells us nothing about if it's cheap or expensive. There's how does that saying go? I'm going to butcher it here, but it's something about there's way more expensive stocks that are under $10 than cheap stocks that are over $100, meaning that I think I might have flipped it. Anyway, the point being, Berkshire Hathaway is what is it like? Let me see. Berkshire Hathaway A shares right now are $521,000 a share, but there's 1,460,000 shares outstanding. So it's all about the shares outstanding, the earnings per share. And it's easy to do because I used to do it too, meaning like, oh, this stock is $7, it's cheap. Well, if that $7 stock has no earnings and they're losing money, it's a really speculative gamble. So uh, it's something you got to learn, but you can't just focus on the price, the dollar price, because I know people will look at like Lockheed Martin. I put a perfect example. I was buying Lockheed Martin at like $330 a share because it was cheap. And I was like, this is a steal at this price. But I know beginners would probably say, holy crap, that's over $300 for one share. That's expensive. So just don't do that. Okay. Look at it. You have to do a little bit more research than just looking at the dollar amount. Cause, again, yes, I love it. You guys help me out there a bit. You got BTI, okay, in the taxable or tax advantage. Yeah, uh, it's worth it. Stock goes up. Not most, or most of my assets are valued at less than $100 per share. Yeah, oh, all right, Steve. Steve, it wasn't a lot. We'll do it real quick for you. Wait, let me hide the comment. I gotta get used to hiding these comments first. Here, we'll do the Simply Safe dividend news really quickly. As we were looking at Berkshire Hathaway there, you can see, make it a little bigger for all y'all. So that's what I was saying, like with this is Berkshire, the A shares, 1,460,000 outstanding, and they're currently earning $24 per share. So, free cash flow is $15 per share. So you're going to multiply just the $24 by the, or divide it. Yeah, no, I don't know what I'm trying to say. I'm thinking of too many things. The point being is that look at the earnings per share, look at the shares outstanding. They've been buying back shares lately. So you can't just look at, just a solid company, but there it is. $521,000 a share for Berkshire. So for you, Steve, what was Monday? Monday was, we'll start here because that was June 30th. JP Morgan, they raised their dividend 5%, which we saw the banks are cleared. They got the lift off. They reaffirmed their WP carry interest, not interest rate. Yeah, I'm sorry. I'm reading and talking to you guys. Higher interest rates, office exposure, unlikely to dent WP carries long. Sorry, somebody's cleaning the window here. I thought we were under attack. My wife's spraying off the dirt from the window down here. Jesus, that scared the hell out of me. Anyway, a couple more. Ticker FIS, Fidelity National. They spun off a business I know nothing about. They say it's going to have no impact on the dividend. And Sunoco, they have upgraded from 25 to 50. Remember, these are just opinions. And these are kind of fun. These next declarations like this. Dude, look at that. AT&T. What do we got now? 1, 2, 3, 4, 5 quarters without a raise. So when are they going to raise again? Personally, I'd love to know what you guys think. I almost think that they should just pay down debt, get some more of their balance sheets squared away, things like that before raising that dividend back up. And then, so there you go. Lockheed. Looks like this is Lockheed's last $3 dividend before they go for a 60, 80, probably a 20-cent raise. So next time around, it should be $3.20, I would guess. Anyway, so there's a little bit of the news, and it's just the news from Simply Safe Dividends. Nothing crazy right there. And, wait a minute. Dude, no, no, don't. I always say this: don't save your money, invest your money, invest in your future. If you have to, give the money to, I don't know, a homeless shelter or somebody that's more down on their luck. I mean, honestly, dude, um, like I said, if you're hell bent on giving me money, of course I'll take it. But it just there's there's 500 things that I would rather see you do with your money before giving it to me. Honestly, just the sorry, I don't, I'm reading this and talking to you guys. Do the new, yeah, don't forget you pay for Simply Save. Yeah, I do, and I'm still on the fence about it. Fun fact, by the way, I may just go for one more year because I share it a lot on the channel, and um, the video that just for whatever reason just took off. I must have did something right. The interview with Sean. That's gonna make me already almost enough to buy Simply Save dividends for one more year. I'm not retiring off it. Like I said, this channel just makes a little bit of money, but yeah, dude. Um, PepsiCo reports earnings. I had a fun thought that I think because I enjoy the products that, and I don't even necessarily eat, I just love when I go to a grocery store, just seeing all the different brands and manufacturers and things that are coming out, that it makes me think I like to have my finger more on the pulse of the consumer defensive sector, just on those stalwart like Coca-Cola, PepsiCo, Hershey's, just all those kinds of companies. I think I'd like to know more about just the businesses, what they're doing, how they operate, kind of make it like my specialty just because I really enjoy it. And honestly, like if I were to look at like healthcare, I don't know. I mean, reading about like drug trials isn't as exciting as about some new like when PepsiCo is doing the hard alcohol, the hard dew, the Mountain Dew, the hard alcohol. Um, that's interesting. I tried it that one time on vacation. Anyway, yeah, yeah, I think it's Thursday or Wednesday. You're right. We're already over time. I'm gonna make sure there's nothing huge here. Yes. Oh, Jim, dude. Uh, Kevin subscribes to Morningstar and Simply Serve. Yep, yep. Simply Serve. All right. So, oh, by the way, in the last newsletter, you guys should have you gotten it. You gotten it. I shared a link to. I don't know, itchy here all of a sudden. I look like a crackhead, like the. Um. Anyway, I shared a link to the Simply Safe Dividends Intelligent Income newsletter. So, all right, guys, I think we're gonna about do it there. I'd love to know. Stay in touch, subscribe to the channel, whatever. If not, I'll be back next week. And hey, just like it, no, not just before you'd like, I can't say it. Before you know it, tomorrow we'll be here, and it's another week of investing and seeing what's going on in the market. So, guys, I love you. Thank you so much for tuning by, and save that thought for next, Steve, VDC. We'll look it up, bring it up next week. We will look about it, and I don't know. I'm getting all tongue tied. It's Sunday night, guys. Thank you again so very much for just swinging by and spending a little bit of time with me. Some hijinks we got going on. So, guys, again, I love it. I will talk to you next weekend.